This is an unbelievable time for contrarian investors who have a positive view on gold.
There are big opportunities in the junior mining sector. Today, we're joined by Mr. Dan Wilton. He's the CEO of First Mining Gold. They're a gold development company with a host of projects in Canada. We're going to talk with him about the general state of the gold and silver market, the precious metals mining sector, but then we're going to focus in on one project in particular at First Mining, the Duparquet project located in Quebec. We had some big pieces of news come out this week regarding that project. Dan, welcome to Ron's Basement.
Ron, it's always a pleasure to be back in the basement, if only virtually.
Well, it's a pleasure for us to have you here on behalf of all of our viewers. Thanks for joining us because you can give us some unique perspective on what's going on out there. What are your thoughts on the general state sentiment in the gold silver markets?
Uh, the sentiment, I think I described it earlier today as, maximum capitulation is kind of what it feels like.
Mm-hmm.
Sadly, I've been financing mining companies for 30 years now. Um, and I can only think of one other time in those 30 years that you had a lack of investor interest in gold developers to the same degree. And I don't think it reflected in even the same kind of valuation differences that you had. And that was really 2015, which happened to be the time that Keith Neumeyer and the other, the founders of First Mining Gold put our portfolio together. The difference at that time, Ron, it's very interesting. The difference at that time was the gold price had gone from $1,900 to $1,100. It was down very briefly, late 2015, below $1,100. None of the gold mining companies were making any money. None of them were generating any cash flow. They all had massive bloated balance sheets from borrowing money to do top of the cycle acquisitions. Uh, and a few of them had taken on projects that needed 3 or 4 years of runway of development, and a lot of those projects are now the ones that are getting built and coming into production, interestingly, and they're going to be the savior of these companies over the longer term. But in the meantime, it's been a challenge. So I think from a market's perspective, this is an unbelievable time for contrarian investors who have a positive view on gold to be looking at this development sector, because you hate to say it can't get cheaper, because it can always get cheaper. It can always go to zero. But with fundamental ounces in the ground and real projects in tier one jurisdictions like we have, and we'll talk about a little bit, you're buying, as we kind of showed in our webinar this morning, probably $2 billion of fundamental value for $100 million of market cap, right? Like that's,
Mm-hmm.
you don't get opportunities to do this very often in one's career. So, it's a challenge. Raising capital is a challenge, and that's why we've continued to look at kind of continuing to work our portfolio to try and free up capital so that we don't have to issue our own shares to be able to move things forward.
Yeah. So if someone believes in the future of gold and silver, for that matter, as well, this current environment that we're in could be looked at almost as a gift, right? Like you and I don't have a crystal ball. We're not offering financial advice, but if someone believes that the gold price is going higher, it could be very likely that stocks right now, the way they're trading in the junior mining sector, let's say 5 years, 10 years from now, we may very well look back and say, wow, we had an opportunity to buy shares that had just unbelievable appreciation potential.
Absolutely. I think you've hit the nail on the head. It is, for a lot of the developers, even if you see valuations go back to where they have been historically, not at high levels, just at average levels. You go back over 30 years and run all of the precedents, you would see that most mining projects that get sold kind of pre-development would get sold at a valuation between $100 and $200 an ounce, typically.
Mhm.
Some less depending on the situation, some more depending on, the growth of the resource potential that they have. But when you have us and a number of our peers that are trading sub $10 an ounce, you have a pretty clear runway on reversion to the mean that looks like 10x or more. Like that to me is that's a pretty good risk adjusted bet, particularly when you're talking about later stage assets. You're talking about things that have had hundreds of millions of dollars spent on them. You're buying these projects for well less than the replacement value of the cost to move them forward, to find the gold and move the projects forward as far as they have been. So no, this is an absolute contrarian investing textbook play here, that I think if you do have a long-term view on gold and silver that you think is positive, and I know that's certainly the perspective of most of your viewers and subscribers. Um, we did a little calculation for fun on what First Mining's fundamental value, the NPV of our projects would be at $2,500 gold. And it gets pretty silly pretty quickly, Ron. Like, honestly,
Add,
the
add, add,
leverage
add,
to gold that we have is crazy.
yeah, add a couple zeros to the end of it, right? Yeah. Or
You know,
three zeros.
it's, and we have a number of our shareholders who have views of $3,000, $4,000, $5,000 gold. And, I've done that math once or twice. That was before we had Duparquet, which has really almost effectively doubled our leverage to gold when you look at how this project could be scoped. Um, with real projects, that kind of leverage, you're talking about almost for every $100 in the gold price, it's like $400 million of incremental net present value, fundamental value for the projects. So you start taking that up to 2,500 or 3,000, and that's a radically different opportunity.
If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement. It feels like the development companies in particular have been overly punished by this market. And I want to make one thing clear for our viewers who may not understand. A development company like First Mining, and you have 6 projects in total that you're involved with to one degree or another, 2 of which have over 5 or at 5 million ounces in Canada. But development companies already have the gold. It's already been drilled. It's already been defined. It's there. And there's a potential with exploration, which I know First Mining is doing some exploration now, that resource could even grow further. But the gold has pretty much already been defined. Now, I heard you say something recently during another webinar that I thought was fascinating, and that is that when we look at the majors, the big companies, the like Barricks and Newmonts of the world, that there's a development there that well, I'll let you tell the story.
Well, it's just that we were sort of making allusion to this a little bit before. They are sitting in the best financial shape, the large producers, the best financial shape they've ever been in. They're generating record levels of free cash flow at a $1,900 gold price. Yeah, they're facing cost inflation, as everyone is in the world, which is part of the reason why, by the way, the price of gold is going to continue to go higher. Because inflation is real and we're all feeling it every day in our pocketbooks. And this is going to be one of those moments that, a big revaluation event could be coming. But the large producers are in very, very good shape, in large part because they have been focusing on paying down debt and focusing their capital spend on their existing projects, but kind of at the expense of the growth opportunities that they have. So a lot of them will have opportunities to, marginally add to their existing projects. They all like owning like big gold districts. So they can, like we have at Duparquet, like we have at Springpole, where they know their exploration success in a gold endowed region is going to continue to lead to finding more gold. And so they have a lot of those. What they don't have are the big step change increases in production that come with putting a new project online, because they traditionally have not been very good at finding it themselves, and they haven't spent any money buying any real development projects really since 2015, 2016. Well, actually really since kind of 2011. So we always need to remember that when you're talking about gold mining companies, this is an extractive resource, right? When you take that ounce of gold out of the ground and get it out of the rock, it's no longer in your reserves. And if you don't do anything to replace those reserves or resources, they decrease. And if you don't replace them, they will go to zero at some point in time. So, you have a lot of the big mines that were developed, in 20 the mid 2000s, mid 2010s to the mid 2010s. Well, those were a lot of those big mines are now 10 years old. A lot of them start with 10-year mine lives, Ron. Like most of them start with 10-year mine lives. That's kind of how you scope the size of the project. And so you're maybe you're in the third period now, you're maybe getting into overtime, right? And you're hoping that you're going to continue to find more. But at some point, um, the large cap and mid-tier gold companies are going to need to add projects to their portfolio pipelines, because very few of them have anything else that they can develop. Now, some will sit and wait for the ones that are being built right now, and they think that they're going to topple over because they borrowed too much money to be built, or they won't work when they turn them on. But I think you're going to see, some of these companies that have been building projects in Canada. Look at Argonaut, look at Equinox, look at IAMGOLD. I think you're going to see these projects. Hopefully, knock on wood, we want them to be successful. We want them to turn the corner. And then this perception change is going to come. And we saw this in 2019, specifically when Kirkland Lake bought Detour Gold. It was like a terrible project because it was built. It took a while for it to kind of work. And then at one point, all of a sudden, it was the best project in Canada, right? Through a very difficult, I had to turn it around. They had to get it sorted out. But these big projects and the ones that have been built and are just kind of in commissioning now, when they start working, everyone is going to feel that they've missed the boat, because the market will pick it up before the strategic acquirer will be able to buy it. And then those values will re-rate and they'll trade at much larger multiples. And then everyone's going to look for what are the next projects they can get involved in. Well, we have a slide in our deck that shows we, in First Mining, with our 100 million Canadian market cap, have 2 of the 10 biggest projects, and including one of the most advanced in Canada that aren't already in construction. So yeah, it's, in some senses, it's, we've always said in the almost 5 years that I've been here, to borrow a phrase from Wayne Gretzky, you want to skate to where the puck's going to be, right? You want to have these projects ready at the time that the industry needs them most. That time that the industry needs the most is pretty soon.
Just a matter of time, because the big companies sacrifice their pipeline in their efforts to do things like pay down debt, become more profitable, right?
Yep.
And at some point they're going to look, and like you said, it's an extractive business. Every time, they like to produce a lot of gold, but the flip side of producing all that gold is for every 1 ounce they pull out of the ground, that's one less ounce they have. It needs to be replaced. And at some point that's going to become an issue. And First Mining to the rescue, right? Oh, so we just happen to have a solution to your problem. One of those solutions, because I want to emphasize to the viewers that you're not a one asset company. You've got, like I said, a portfolio of 6 projects that you either own outright or have a partnership interest in. But There's a super exciting new project that you have that you kind of put together about a year ago. That's the Du Parquet project located in Quebec. It has a number of what I think are unique attributes to it that make it, not only attractive because how large it is, but also because of its location and a number of other factors. And you had some big news out this week, a PEA, a preliminary economic assessment. Will you tell my viewers, just start out by telling us what exactly is a PEA for those who don't know?
Yeah, so the PEA is really uh, call it a scoping study. So it's an economic study with a basic level of engineering that looks at a mineral resource and puts parameters around it with a mine plan, with indicative costing, capital and operating costing to say, is this project economic? So, we work with an engineering group, and the group we work with, G Mining, um, actually has a reputation in the industry as one of the best mine construction contractors in the world. I saw something they put out earlier this week, I think, that says they've never been over budget on delivering a project. So, maybe you don't want those guys costing your PEA because maybe they're conservative when they go into these things and set budgets, but very, very credible. They've built a number of big mines in Canada and really all around the world. So we're very happy to have had them work with us on this. But it is basically a preliminary feasibility study. So an engineering driven and geology driven technical document that lays out one concept for a mine development and then puts economic parameters around it. So you can look at mine life, you can look at IRR, you can look at NPV, you can look at gold price sensitivities and things like that.
Okay, so is it accurate to call it a like a rough business plan to a certain degree? I mean, looking at the
Yeah,
whole picture, yeah,
I think it is more detailed than something that's that conceptual.
sure.
Particularly on the mining side, like your mine planning that you go through is much of what you would do mine planning for a real mining operation. You're taking the resource and scheduling out, tons and waste mined and, really going through it in a rigorous way to come up with what that annual production of tons and grade is that then you feed into a plant with recovery assumptions based on all the metallurgical work that you've done to tell you, how much gold you think you're going to produce, what it's going to cost, and how much money you're going to make. And so that's what came out of our Du Parquet uh, PEA here was something that I think uh, will catch a lot of people by surprise. This is a project that had a pre-feasibility study done on it in 2014, and it kind of scoped a decent size operation. It was a little bit smaller than we scoped it, 10,000 tons a day. We scoped it at 15, um, and it produced 120 to 150,000 ounces a year, which is a good mid-size, mid-tier sized asset. But by changing some of the parameters a little bit, incorporating some of the underground opportunity that we saw there, we have a mine plan that's 11 years that we know is going to grow. That 11 years actually only tackles about half of the resource that we have. So lots more opportunity to continue to see that grow. But that shows average annual production well in excess of 200,000 ounces, and in some of the years in excess of 250,000 ounces. If it were producing today, this would be the third largest gold mine in Quebec.
Wow, wow.
So
And I want to point out as well, cash cost $751 and all-in sustaining cost under $1,000 at $976
yeah,
per ounce.
yeah. So that just kind of shows, what the real margin is that you have in these ounces, and that's, with cash costs at an $1,800 gold price, you're talking about $1,000 cash margin. Um, that would be certainly in the bottom half of the cost curve, maybe, knocking on the door of the bottom quartile. So very robust project from an economic perspective, high margin ounces. And importantly, and actually reasonably simple project from a process design perspective.
Interesting. And I want to point out, I want to repeat something you said for the viewers. This plan only really incorporates about half of the known resource that's on that property. And it sounds like there's a relatively strong level of confidence that with exploration, that number could even get bigger, the amount of gold that could be defined on that project.
Yeah, I mean, you have seen, Ron, that we put out some drill results earlier in the week as a little bit of a, make sure people are paying attention before we put out the PEA. And those are the results of the first 3 holes that we drilled at Duparquet. Um, and some pretty interesting results in there, like 4.5 meters of 6+ grams, a bunch of it in an open pit, and then actually going through and discovering a new zone that was not at all modeled into the PEA, something that's just adjacent. We've got it traced over a few 100 meters of strike length. So, we're 100% confident in the fact that we are really still only scratching the surface of this deposit. It starts in a pretty similar way to the way that Osisko started with Canadian Malartic, which is the largest gold mine in Quebec. But put into production in 2012, I think. Now at the end of its open pit mine life, and in the years that they've been mining and making great gobs of money, they are now, they're going underground on that deposit at grades that are pretty similar to what we're going underground on. So,
Interesting.
and they're going to mine for another 30 years there or something like that. That's what happens at the Abitibi. So we've only drilled down about 500 meters, a few drill holes deeper than that. They're sinking a shaft to go down 1,800 meters. And they're going to do a lot of mining between 800 and 1,800 meters, right? Like that's kind of the geological environment that you're in the Abitibi. The common phrase is, the real mine starts a kilometer down, where you get concentration and higher grades for real underground, big widths. We haven't even tested that yet. So, the resource that we have, 3.4 million ounces of measured and indicated, which is a higher confidence level, and now 2.7 million ounces of inferred. You got to remember that includes 1.5 million ounces at 4 grams that was mined out of this deposit in the 30s to the 50s. So when we look at sort of the existing plan, it's pretty heavily focused on the Beatty and Donchester mines, 2 of the old historic mines. That's kind of the bulk of the Duparquet project. We've got 2 other pits we're just scratching the surface on, at Central Duparquet and Dumico, which are just to the east. Those can absolutely connect. There's no reason, it's not like they've been drill tested in between. They're only tested about 250 meters down. So, the ability to say, okay, in 3 kilometers of strike length, we've got, what will total, including what's been taken out, 7.5 million ounces. Like, there's a lot more that we're confident we're going to be able to find here. And James Maxwell and the exploration team are absolutely champing at the bit to get keep the drills turning. We're just kind of finishing up our phase 1 drill program now, but we have a very high confidence this is going to continue to grow.
First Mining Gold is a development company advancing 2 of the largest gold projects in Canada. Springpole in Ontario and Duparquet, located in Quebec, each already has 5 million ounces of gold reserves, but exploration initiatives are underway at both projects to find even more gold. First Mining is well-financed, has 0 debt, and owns an interest in 4 additional Canadian gold development projects.
And I want to point out to our viewers as well, it was just a year ago that you put this whole project together. And I think it's an interesting story. I mean, it's super exciting. And it was like and I'll let you tell the story, but it was like different families owned different parts of it. It had been kind of fragmented for a long time. And for years, and Keith Neumeyer, when he founded the company, I think I heard him say, he had this in mind at some point that this could all come together, that this is really a unique opportunity, like a once in a lifetime type opportunity where you were able, and I know Keith has given you some great compliments on this, that you were able to structure this to bring this all together under the First Mining. You own 100% of it, if I remember correctly, and there are no royalties attached or anything.
Yeah, that's right. We own 100% of the projects. We have some royalties on some of the peripheral projects, so Duquesne and on the ground we acquired from IM Gold earlier this year, because we've continued to consolidate it around after we put it together. But on the main Duparquet ore bodies that are in this PEA, yeah, there's no royalties on it. So yeah, it's this is, as you say, this was a project that was owned essentially by the same family and their associates since the mine closed in 1955. One group or a couple of groups had done some work on it over the years, and quite a bit of work on it in 2008 to 2014, 2015, which is part of the reason why we had such great confidence that this was, this is a project that you knew was going to get to an outcome like this PEA, because it's probably had the replacement value if you had to do all of that drilling and all the work that they have done there. I think the replacement value of that work is probably $100 million. We acquired it last year in total, acquired the companies that own these deposits and the surface rights on them for a total of about $25 million. So 10 in cash and 15 in our shares. Lo and behold, we put out something yesterday that says that this at $1,800 gold, we think has a fundamental value approaching 600 million. And if you look at Blindfold Bear's prediction for $2,500 gold, this is worth billions of dollars. And I think we have every path to be able to continue to de-risk it, to move it towards those kind of value milestones. So hopefully, the shareholders are feeling pretty good about the fact that in a year we've been able to demonstrate that, in having put this together, we did a good deal for the shareholders at the time. And fortunately it shortened our cash runway a little bit by doing it, but I think it's given us something that we have very high confidence in, ultimately this being something that will be worth multiples and multiples of our current market cap.
Yeah. Yep. And I know you have good relationships with the local community. Another key thing that I think everyone in the investing in the mining sector looks at is jurisdictional risk. And I would almost say that, you can check that box with this project almost 3 times, because it's in Canada, it's in Quebec, which is becoming a mining friendly jurisdiction. And this mine is, located on a highway. There's local community and support. And any other great attributes about the location or the mine that you want to bring up?
I think one of the biggest things that we appreciate is just the proximity to people who work in mining. The Abitibi is probably the home to much of the greatest mining talent in Canada from an operating perspective, and we see that in our drill crews that we use on exploration. Within 120 miles of this project, for context, you would have over history probably more than 100 mines. You've probably had almost 200 million ounces of gold produced since the early 1900s. And sitting today, you would have, I guarantee you, within 120 miles, every mining contractor or equipment supplier in the world. So, if something breaks, it's like an hour and a half drive to Timmins. Timmins has, a bunch of big open pit and underground mines. You're, 40 minutes, not even half an hour to Rouyn-Noranda, which has a bunch of equipment suppliers and very talented, hardworking people who work in mining, a lot of whom work all over the world. to go to work in other mines. So no, I think you can't overstate that in terms of the importance of this jurisdiction. It's people who really know and understand mining, and one of the stats that we got in writing up the PEA is that I think 1 in 7 jobs in the Abitibi is directly related to mining. If you look at indirectly related to mining, I'm sure it's probably 1 in 3. Like, this is really important, and people get it. So yeah, the relationship with the municipality, listen, we've been very early, had great dialogue with the municipality. The municipality has concerns. This is a kind of a first cut of a plan. But very much understanding, and we know, and we want to make sure that they know that this is kind of a once in a generation. It's kind of a once in 100-year opportunity, and we phrase it that way, Ron, because the first mine at Duparquet opened in 1933.
Wow.
So we really want to open the second one before 2033, or make sure that we're pouring gold in 2033, because I think it just speaks to the legacy of mining in Quebec, and what these major developments can do for municipalities and for communities, for Indigenous communities. The opportunity to bring that economic growth and let people work close to home, I think, is great, particularly when you have this very talented workforce, a lot of whom get on planes every 2 weeks to go fly all over the world to work in mines.
Instead, they could drive 20 minutes and be at their new job.
Yeah,
It sounds
in
like
a perfect world, actually buy a house in town, and then drive 3 minutes to be there, right? Like,
wow.
that's the dream scenario. So
it sounds like there's a spirit of cooperation, and that mining and building a mine in that area obviously is not a foreign concept, that it's kind of ingrained in the community and the culture over, like you said, many generations. I'm super excited. I get the feeling that you called it a once in a generation, once in a lifetime opportunity, a very unique opportunity that you've been able to uncover. And I want to point out to the viewers, as well as the company, that's just one of the projects. You have some exciting development going on at a number of different projects right now, including Spring Pole, which is another 5 million ounce project, and a host of other projects as well.
Yeah, that's exactly right. So, Spring Pole, we're confident that we're going to see it as the next major gold mining project permitted in the province of Ontario, targeting getting our final environmental assessment submitted next year. Long way done the feasibility on Spring Pole, and a lot of great work that's been done there. Yeah, and then there's all the other assets in the portfolio, between our ownership in Pickle Crow and our ownership in Hope Brook, and our shares of Treasury Metals, and our Cameron project, which we never have enough time to talk about. So there's lots more going on in First Mining.
Let me just interject. Cameron's like my favorite. It's like the forgotten little brother. But I know Keith Newmeyer has spoken positively about Cameron, and correct me if I'm wrong, but there's roughly a million ounces in the resource at Cameron.
Oh yeah. No, absolutely. And we consolidated the land package at Cameron late in 2020, and we've done a bunch of really good, not field work on exploration, but a lot of really important kind of sort of integrating the data that we have, and continue to do that at Cameron now, looking at how we integrate some of this East Cedar Tree. We've got 5 or 6 walk-up drill targets there that, you talk to James Maxwell, exploration guys always, know that they're going to find more gold. But 2 million ounces at Cameron is entirely in the realm of possible. So, and it sits 80 kilometers from New Gold's Rainy River mine, which is basically running out of open pit ore in the next 2 or 3 years. pretty soon going to be a 25,000 ton per day mill being fed by a 3,000 ton per day underground mine. So lots of room to be able to process more, should we say. Yeah, no, it's a textbook kind of first mining. Lots of work been done on it, lots of existing resource, lots of stuff to follow up on. But unfortunately, Ron, we always need to prioritize because we're trying to keep the spend rational so that we don't have to dilute the shareholders unless we absolutely need to. And I think all of those other projects, have gone a long way, in similar situations, a long way to allowing us to raise, almost $50 million in monetizing, some of the other assets that we had, our royalty portfolio, some of the other projects, the silver stream at Springpole. So all told, over the last 3 years, that's raised almost $50 million of real into the ground work that we've been able to do and not dilute our shareholders. So we're pretty proud of that too.
Yeah. Well, now's the time where I should say goodbye, but I have one more thing that I want to say, because I am a shareholder in the company, what to me is a significant number of shares. And I followed the company closely for many years. You have been both strategic and resourceful, and I believe value oriented in terms of how you've steered the company over the years where you have been there. And you cannot control Dan Wilton or anyone. You can't control the overall sentiment that's in the market. But in terms of the things that you can control, I think you're making wise moves. Horrible analogy, but if you were the head of an America's Cup sailing team, right? You can control the boat, you can control the crew, but you can't control the wind and the seas.
Can't control the wind. No, exactly.
Right. Yeah, you can't. And I really feel like, and I know you're invested in the company as well, which is a super important factor for me when I make investments in companies, that you are stewarding shareholders' capital the best you can, and strategically balancing the need for furthering these development projects with the financial needs of the company as well. So I want to say thank you.
Well, I appreciate that, Ron. We certainly have always very much supported or appreciated your support, which has been ongoing. And yeah, for those of you who don't know, Ron was, we kind of met each other because he was the best research analyst that we'd ever run across that was covering our company, even before in the very early days of the basement. So
First Mining Gold is amongst probably some of my first 5 or 10 videos that I ever made. So I've been interested in following the company for many years. Dan, thank you so much. I know you've had a long week, a lot of news, a lot of travel. If people want to learn more about the company, they can go to firstmininggold.com. Is that correct?
Yep, absolutely. And you can send emails info@firstmininggold.com, or you can always reach the ever resourceful Paul Morris.
Yes.
Paul at firstmininggold.com. Paul will follow up with you very, very quickly thereafter. But lots of information. In hopefully not too long, we'll have the full detailed PEA report out on Duparquet. People can dig in, but please feel free to reach out. And it's again, I think it's an unbelievable time right now, an opportunity to be kind of thinking a bit contrarian here, and certainly appreciate Ron, as always, the time and the opportunity to chat.
Yeah. Thank you, Dan. On behalf of all my viewers and everyone who's still with us right now, thanks for your time, and we'll talk to you soon.
All right. Thanks, Ron.